hope you're well. Welcome. I almost missed my own show this morning because I've been doing too much work last night, so I almost didn't wake up this morning. But yeah, here I am, bright and early, and went through a shower luckily before I got here, so awesome stuff. But welcome. It's a beautiful day. I was standing just outside the door and I was almost late to start. I was just admiring the clouds and all of that. I don't know if I ever shared this with you, but I just heard someone say once that you need to really take time to look at the sky and just watch the clouds, because you will never see them like that again. Doesn't matter how many beautiful clouds there are, they will never look the same as what they look right at this second. So I always remember that, and you'll also see me take a lot of pictures off the clouds and all of that. So anyway, one of my weird passions, I think. But good morning, welcome. So awesome to have you with us this morning. Packed show. We have Hugo van Zyl with us from Tax Forum, and Hugo, as you know, is a cross-border tax. I don't know what to call him, because he's just amazing. He's been doing this since many years ago, since I was a wee little boy, it feels like. So really happy to have him here. I've had him on the podcast a couple of times before, but we're going to be talking about all the changes to the exchange control and all those awesome questions we get from clients. We're going to deal with that and also help you, how to answer clients and maybe where to steer them if you need more help. And then we also have Nikki McDonald back this morning doing the news for us. We have Norma. We have Razan doing the marketing and branding segment, and that's going to be the show this morning. So without any further ado, let us head on over to the news studio.
Good morning, Francois, and good morning to everyone that is listening. I've got some breaking news for you this morning. The Minister of Finance, Mr. Tito Mboweni, has appointed Mr. Unati Kamlana as the new Commissioner of the Financial Sector Conduct Authority. Ms. Astrid Luden was appointed as the Deputy Commissioner. The FBI wishes both these individuals very well in their new roles. Then, the Oxford Risk, together with Momentum Investments, has released a paper titled Under the Microscope, Noise and Investment Advice. The purpose of this research was to detect variation in investment advice and to understand where it comes from. It investigated questions such as, for the same client, do advisors agree on the risk level they would recommend? Which factors, relevant or irrelevant, influence their advice? For example, do advisors project their own attitudes to risk onto their assessment of clients? And how much of the variation in advice is seemingly random or due to inconsistency? In other words, how much is noise? In short, this study finds where that investment advice that was given is very noisy. A really interesting paper. Go and have a look at it with South African data, and that can help you enhance your client experience. Then another piece of interesting news that will be valid for all our employers and CETA levy payers out there. CETA opened their funding window for the 21-22 discretionary grant funding this week. So this is to address the national priorities through skills development. Applications will be submitted for funding in support of learning programs that lead to occupations that are hard to fill in the insurance sector, as captured in the CETA SSP. That will be prioritized. So have a look at the critical skills list. For the insurance industry, there are a few OFO codes and jobs listed on the critical skills list. If you are an employer and pay in CETA levies, visit their website and see how your employees and your company can benefit from this funding. The application window opened on the 19th of April and will close on the 31st of May. A shortage of skills in our area and in our industry is definitely on the cards, so go and have a look at it. And then my last little bit of useless information, news for your dinner party this weekend, for the cat lovers. According to a 2007 article in Scientific American, unlike other mammals, felines can't taste sweetness due to the fact that they lack 247 base pairs of the amino acids that make up the DNA of a certain gene. There is a number, but I'm not going to read it. As a result, this gene does not code for the proper protein, and it does not permit cats to taste sweets. Poor cats. From the FBI, have a wonderful weekend. And for those of us, you that are lucky enough to have a long weekend, enjoy it even more and stay safe. Thank you, Francois.
Thank you very much, Nikki. Have a wonderful weekend, and we'll chat soon. And keep safe. I'll see you hopefully again very, very soon. So thank you very much. Have a good one.
Thank you.
All right. So with that, let's listen to what Norma has to say. We're talking about input versus output this morning, or creation versus consumption.
Well, let's look at input versus output today. So input is really anything that we consume. So that is any information that we take in from our different sources. Output or creation is anything that we produce, anything we take action on to get a specific result. So we have a primitive brain, as you know, and it always wants to keep us safe and alive. Seeing that consuming is a passive action and it's quite easy, it's obvious that our brain will default to rather be doing the passive action than doing massive action. So let's look at each one individually and see how this affects us and how it affects our lives. So consumption can be categorized as positive and negative. So positive consumption is anything that comes in that makes us feel good. So that can be listening to podcasts, attending workshops, programs, courses. Negative consumption is anything that comes in that doesn't make us feel good. So that can be if we are in a conversation which is quite negative, or it can be news, for instance, where the stories is filled with doom and gloom. Creation, on the other hand, can also be categorized as positive and negative. So positive creation is anything that we take action on which takes us closer to our goals. So that can be if we decide to create a webinar where we have 50 seats and at the end we have 10 attendees. Although we've missed the mark, we are moving in the right direction. So we are moving closer to our goals. Whereas negative creation is anything that we create which takes us further away from our goals. So that can be, for instance, if we decide we're going to start a business and sort of halfway through we say, okay, I'm going to start looking for another job now. Or if we say that I want to live a healthier lifestyle and maybe lose weight, and in the process I'm actually gaining weight. So how is this relevant to you? How does this impact your life? So we are creatures of habit. And as I've mentioned, the primitive brain wants to do what is easy and what is comfortable. And then we also have the developed brain, which is more responsible for rational thinking and for the vision that we have and achieving goals and setting goals. So I think it's important that we are cognizant of the fact that we would always default to what is easy, and in this case, the consumption. So I'm not against consumption. I think it is sort of the first step in us learning, but we need to balance the learning with the action. So if we, for instance, keep on reading books about becoming a better salesperson, we would never be that salesperson or master the skill unless we actually get out there and do the action and actually sit in front of a clients and trying to sell a product to them. We also need to balance the positive and negative inputs that we get. We aren't always in control of the negative input, but at least we know that if we balance, let's say, 30 minutes of negative input with 30 minutes of positive input, then already we are in a better place. We also need to separate facts from opinions, because a lot of times people are reporting the news as a fact. And I think there it's important for us to sort of use our own discernment into making our own decisions, saying, how is this going to make me think and feel? And then lastly, the best place to be is to plan for the positive outcome and to plan for positive input. So it's important to do the planning part, because otherwise we would be doing much of what we've done in the past and what has worked in the past. And we know if we want a different future, we have to do something different. And then make sure that it gets into our diary, because as you know, if something is not in the diary, it's not going to happen. So I hope this gives you a different perspective on consumption and creation. And the next time that you are in a position where you're only consuming, maybe this session and what I've said to you now would make you feel a bit different about it. So thank you for your time. Thank you for listening. And I'll speak to you again next week.
Awesome stuff. Thank you, Norma. And really looking forward to really just go and think about, because again, some of those examples are like speaking directly to me. You know, like you want to lose weight or you want to get fit, but let's not get into that. So thank you very much. I hope you have a lovely weekend, and we'll see you back next week. So with that, I'm really excited now to introduce to you Hugo van Zyl. If you don't know Hugo, you are going to get to know him after today. He's an amazing guy and really knowledgeable, and really knows what he's talking about. And I think the one thing that stands out most about Hugo for me is his willingness to help and what he does for so many. So definitely somebody that you can refer people to. We've been sending all our clients, that work overseas or that move overseas and those kind of things. That are not the run-of-the-mill type of client, we definitely send them over to Hugo, and they get their money's worth guaranteed. So with that, let's get into today's topic. Good morning, Hugo. Welcome.
Good morning, Francois.
Awesome to have you. You are somewhere at a lodge, I think, this morning.
Yes, yeah.
So thank you so much for making the time and for organizing that you have proper Wi-Fi. I think there are people sitting there going on the cycles, to keep the power going so we can have Wi-Fi. Not really, but good morning.
No, it's close to that. So thank you for the kind words. And yes, I'm in a lodge outside Oudtshoorn, really in the mountain areas, and a beautiful, beautiful area. Very dry, but a beautiful little lodge.
Oh, nice. Hugo, we don't have a lot of time, but we have so much to talk about. So I really want to get into this discussion. And I think something that's most topical at the moment is really this whole thing about the immigration concept that has been phased out or that's been changed. Previously you needed a tax certificate or a clearance certificate that you could go and take money overseas, and it was limited to 10 million. And if you wanted to take more than that, it was a whole thing. So, before I sort of get to all these changes and what it really means to all of us, I think maybe a place to start is just to say, well, we all know that now the new rule is that, 3 years you have to be out of South Africa. You need to be a non-tax resident, if I'm not mistaken, for 3 years or longer before you can now take out your RAs and your retirement funds and those kind of things. Because it feels to me like that's mainly what most people are concerned about. So the rule was when you already started the process, you were still okay as long as you then did that before the end of Feb. But now people have been out and maybe they haven't heard about this, and now they didn't start any other specific process. So they've been outside of South Africa, but they're still tax resident here, I would suppose, because they never changed it. So where are we with that, and what's going to happen, and how do we deal with that?
So interesting, Francois, the South African Revenue changes their process to align with the new rules at 2:00 on Friday today, the 23rd. So they ask us not to submit any processed applications from 2:00 today. I personally have not filed anything this month. I'll rather wait for the new system because they relaunched their webpage, that SARS, on the HTML platform. So if you go in, you'll see it is a little bit different than in the past. So back to your question. The 3 years is a backdated. So it's not 3 years starting on the 1st of March. So the rule came in on the 1st of March because if you did not file for formal immigration or financial immigration on the 28th of February or before that, then you enter the new system. That system starts on 1 March. The processes will now start, let's say 1 May, but SARS says it will go live at about 2 o'clock, between 2 and 5 this afternoon. So wonderful news for the people who have been outside of South Africa for more than 3 tax years. They can actually, even if they haven't told SARS, they can now update SARS. So there's 2 groups of people that I suggest that, or 2 lines that they must follow, processes they must follow. The one is someone who is out of South Africa, tax non-resident, owes no money to South African tax revenue or revenue services. Easy process, we just update SARS, we backdate it, no problem. Those who need to pay an exit tax, they need to do a voluntary disclosure process. They then legally backdate their tax immigration, and then they can take their retirement annuities out. And as you've seen, SARS has recently published, specifically, there was that podcast by Commissioner Kieswetter, who said everybody who's got any rental income must please follow the VDP unit process, because they've now got CRS info, and we can't really, on this show, probably use brand names, but you know that online platform that is the biggest hotel with no property? I think SARS have received some information from those guys, and we all need to look at that, not just the expats. So if you've been renting out your house, that is the evidence that you need to show to SARS that you are not here, that your habitual home is abroad. So at the same time as doing a tax immigration, let's do the rental VDP, and then we can legally take you back. And don't worry, financial immigration is dead, but we have an alternative process. And the only big concern, not really that big, in your industry, I'm from the tax industry, you're from the financial planning industry. So there's a little bit of a worry from the tax industry side, because the application process for encashing the RAs is now at fund level. So in the past, we used to first go to the Reserve Bank, then Reserve Bank sent you back to SARS, and you got the tax clearances. Now you must go to the fund. The fund must then collect the information that you are living abroad, the necessary evidence like a tax residency certificate, or if you're doing it for your client, collate that. And now the tax accountants or tax practitioners and the financial planners need to hold hands. So I think it's a collaboration of the 2 industries, which is probably overdue. So although I'm worried, I'm looking forward to the holding hands.
Yeah, and it's I just something that you mentioned. There's 2 things that sort of I want to ask you about, Hugo. The one is you spoke about 3 tax years. So it's not since you left 3 years or a rolling 3 years or something like that. It is for 3 full tax years that you need to be out of South Africa. So if I left in December and then it ends at February the next year, does that first little bit count as a year, or is it only the next tax year that would be counted?
So this is my interpretation. The Act actually uses the word year. The word year is not defined in the Tax Act. We use the word year of assessment, or the phrase. So if you, for example, left in July of 2020, you have 2 tax years. You have a March, July 2020 tax year, and you have a 1 August to end February tax year, 2020, the 21 tax year. So I would say that last few months, that is a tax year. Well, the law says it is a tax year. So I count that. So it need not be full 3 calendar years. It must be 3 years of assessment. So what we call a tax year. So the word tax year also not defined, but it need not be 36 months. Okay, it can be shorter then. But do realize you can only apply in the 4th year. So it's really going to take you to cash out about 36 months. Okay, because we have no idea how long that process are going to be. We'll know from Monday onwards.
Yeah, no, awesome. And then you're allowed to say Airbnb, it's fine. We're not a commercial station, so you're more than welcome to say who these oaks are with the app.
Yeah.
And I think there's an important point in that statement is that, there's a lot of information being shared, because I remember when I used to be in tax practice, that it's always, even if we do training for financial planners on tax and that, there would always be 1 or 2 people saying, but how would SARS know? How would SARS know, And it's like, yeah, back in the day, we could play that game. Now you can't anymore, because there's this sharing of information internationally. It's not just, what do we have on our South African systems? So that's definitely something I think we need to remember.
answer you very, very practical. We must remember The PayPal platform South Africa is on the FNB Bank platform. Rand Merchant Bank is the exchange control dealer, the authorized dealer, okay? And they are reporting to SARS. They're not even outside South Africa. So some people do receive the money in foreign bank accounts. And people always said, no, CRS does not include rental income. Correct, it does not include rental income, but it includes the movement on your bank account. So don't be positive and think, okay, they don't report rental income. Just think about it. You have transferred money to South Africa. The Reserve Bank knows about it. Reserve Bank shared it with SARS. They both report to National Treasury.
Yeah. And yeah, the other thing is that, for instance, so the Patreon account that I've got, where there's a few of the viewers that sort of supports the show through that, and even on there's a form that I needed to complete. Like all the money is still sitting there. I've never cashed anything out because there's a form I need to complete. I can't remember what it's called, WFE 88 or something like that. But anyway, it's a declaration to them whether they should be deducting tax or not. And you need to cite even the section in the double taxation agreement that would render that, or would actually cause them not to have to do that. But you have to complete all these forms, and these things are standard. And if you now look at my Zoom just renewed, so obviously with the VAT Act that changed to say, well, like these electronic services, there needs to be VAT if you are rendering the service here, but you are based in somewhere in another part of the world. That was an additional 15% on that fee. That makes a massive difference around the costs. And this is where people aren't, like, there's more information flowing between the different tax authorities in the world. And, there's no more place to hide, or very little place. And I would rather not play that game. Just as an add-on comment to that. So let's talk a little bit about, like, financial immigration was the thing. There was a lot of talk about it. There was a lot of controversy about it. There was a lot of banter about it. There was a lot of debate. There was a lot of head bumping around it. I think so. There's lots that happened around financial immigration or formal immigration or whatever we want to call it. So what is our stance right now with regards to that specifically, now that the 1st of March have come, and we said we're abolishing this sort of concept of immigration? Where are we at this point?
I love the word that you said, abolish, because it is really an abolishment. The Circular 6 from the Reserve Bank said phasing it out, but it absolutely died on the 1st of March or the day before the 1st of March, to the extent that those people who have blocked accounts now no longer have blocked accounts. So they, for example, who previously could remit income post formal immigration, they could freely remit that out of South Africa. They now have to follow the same rules as you and I. So there's now equal play between South African ID holders. Okay, so now there's a big difference between what they call a resident for Reserve Bank, that's anyone with a South African ID, and a resident for tax purposes. So your resident status with the Reserve Bank determines how you get money out of the country, and they say go to SARS. First million you can take out without tax clearance, and the next 10 million, whether you're a tax resident or not, you will have to get a tax clearance. Anything above 10 million, you need a tax clearance first, and thereafter it goes to the Reserve Bank. So there's a verification process at the Reserve Bank, whether you live in South Africa or outside South Africa, and they will look at source of funds, Anti-Money Laundering Act, and that you're not on the different lists in the world as people that should not be banked in South Africa. So we had a meeting with the Reserve Bank on Wednesday. We were given the undertaking that they will not take very long with that. They're ready for it. SARS is launching their process this afternoon, 2 o'clock, as I said, and it seems like everybody is ready to go. The very important part is that in Circular 6, and Charles from the Reserve Bank reconfirmed that on Wednesday, and he quoted Mark Kingan from SARS saying, capacity will be thrown at this. But the Circular 6 says that anyone who is tax non-resident, so they cease to be tax resident either as ordinarily no longer resident or non-resident because of a treaty. Everybody has to go through this new process, the TCR 01, Tax Clearance Application 01. And even if you're transferring money or not, obviously they're asking people with money to be transferred to do it first, but they want everybody to list their remaining South African assets. So that principle of remaining South African assets is very important, because remember, when you tax non-resident, that is what SARS can tax. Your remaining South African assets, most of the sales, like stock exchange shares, will not be taxed in South Africa, but immovable property will be taxed in South Africa. So the other important part is that there's rumors in the market that a new Circular 6 or an update is coming out first week in May. At the moment, the authorized dealer guide says any individual can send out R1 million without tax clearance. And SARS apparently requested National Treasury, and they will probably force that on the Reserve Bank. I believe it's coming in, saying that as of, let's say, 1 June, anyone who wants to even send the 1 million out, although without a tax clearance, must be a tax resident and have a tax number. So all of us who've been using our young children at varsity to get some money out of the country, and we use the 1 million without them having tax numbers yet, we now will have to get them tax numbers. And also very, very important, because this is worrying for the permission to use the South African credit card. So remember, we still, if you did not formally immigrate, you were allowed to use your credit card up to R1 million outside. That R1 million was part of the single discretionary allowance. If they now limit that to only tax residents, we have no idea how the banks are going to monitor it. But the rumor is coming from the banks. So expect some announcement there. I don't have it. I'm not in the banking industry anymore. But I'm sure that there may be bankers listening to us, and they can confirm maybe in the chat box if they have any implementation date. But in short, the breaking news is the R1 million will very soon only be for tax residents.
Awesome. So my next question then is, so I've done financial immigration. I've gone through the process, paid the fees. It's all done. Where am I now? Like, left with this? Am I okay? Do I need to redo this? What's happening there? What is what are they doing?
Your only benefit remaining is that if you've done financial immigration, that if you have a retirement annuity in South Africa, you can cash it out via the Reserve Bank process, the old formal immigration process, before 28th of February 2022. So you have less than about 8-9 months left. Everything else, all the other benefits, the right to take post-immigration income out is lost. The right to take 20 million rand out of the country per family without tax clearance is lost. Everybody is now back to the same process you and I living in South Africa has to follow. Let's make it practical. When you did formal immigration in the past and you had your own family company in South Africa, the dividends could post-immigration flow out of South Africa, provided that auditor gave a tax certificate that the withholding tax was paid, normally 5 to 10%, and a certificate to say that it was income post-immigration. It wasn't income that was retained at the time of immigration. And then it went out. Now, add to that, if it's below R1 million, you cannot send it out because you're not tax non-resident. New rules coming, we don't know when. So you will immediately have to apply for the 10 million rand rule. So there's a little bit of a challenge on all those people who have done financial immigration or formal immigration. And that is where Circular 6 says everybody needs to redo it. So not redo it like a once off in the past. It's an annual process, and that 10 million is a calendar year 10 million. And in short then, what I earlier forgot to mention is that the 10 million is now a glass ceiling, and it's a process ceiling. First 10 million, only SARS approval. Any amount above 10 million must be done first at SARS, and then you go to the Reserve Bank, and they do only a verification of source of funds and that you're a legitimate person, that there's no issue about money laundering and so on. They no longer look at proof of where you live or whatever. Okay. That brings us to one small question, as in the past, formal immigration people had the benefit that they could take that money and put it in an offshore trust. But if you and I applied for anything above 10 million, the Reserve Bank said that you could not invest the amounts in excess of 10 million in a foreign trust. You had to invest in your personal name. Now, that clause they removed, but we don't know what's their policy decision. So we have asked them on Wednesday in the meeting, in the next update, Circular 6, when it's either replaced or updated, they have to give us the new rule for the investment, how you can invest the amounts above 10 million. But in short, if you can show source of funds, you've paid the tax on 300 million, we can take 300 million rand out. But that's just an example. There's no glass ceiling.
Yeah, because that was actually my next question. Will those FIAs still be applicable? So do you still need to apply for a foreign investment allowance certificate?
Very much so, yeah. And also interesting what we have seen now on the new system, and remember, it's not completely implemented. I have followed up with SARS and Reserve Bank, and they both say that it's totally legitimate. If you applied in the last 12 months for a 2 million, and you've sent the money out, and you still have that other 8 million for the calendar year left, 2021 calendar year, you can just refresh that application, and it will immediately give you a PIN. Okay, so it seems that SARS is not going to ask for another balance sheet and another list of the last 3 years capital gains tax. Once you have a 1 million out of a 10 million clearance, you can just keep on refreshing it. They may remember in terms of the law at any time recall it. But the first 10 million seems to be really an easy process once you've had the first one. It is just to get that first one right. And that's when they ask you, are you tax resident or are you not tax resident? Now, at the moment, that TCR1 has a question that I hope will be gone today. And I've heard that the tax return for this year is going to have it in, and I'm very, very worried about it. But the practitioner who called me about the RAV, one of your listeners phoned me yesterday saying he's going to listen in about this, and he asked me to deal with it. The RAV, that old Adobe Flash, is now on HTML, and it now has a question where you can select whether you're tax resident or foreign national. And I'm very worried that SARS are using that word foreign national because it's not defined in the Income Tax Act. A foreign national is a Reserve Bank reference to a work permit person who's temporary in South Africa. So please, if your client is living abroad, don't select that foreign national unless he truly has a foreign passport and probably lost his South African passport. So I've raised that through both my two professional bodies, the RCBs, the tax professional bodies, and said, please clear that up with SARS. This foreign national is a misnomer on a tax return.
Yeah. And there's all these little nuances that sort of slip in. It seems like, there's things that happen which is unintended, and then it takes so long to get it fixed or sometimes to get clarification on these things. So very, very
Francois, I can be honest, and even I sometimes have to sit back and say, was this an old Reserve Bank rule or was it a SARS rule? Because it's a total mental shift we have to do. Because effectively, and I don't know if it's anywhere in the policy, it's just what I'm telling my client at the moment. The control over the flow, this capital flow, okay, is now very much a tax controlled process. So SARS is in control of money flowing out. And the fact that if it's true that they ask that this 1 million must be linked to a tax number and not an ID or work permit number tells me they are in control. And CRS and FATCA information is now operational. So it's an interesting thing. That's one of those things that we hope that they will now tell us very soon, how they are data manipulating those CRS and FATCA information, those forms that you previously referred to.
Yeah. And we're not even talking about this whole SARS has their own browser kind of issue, so let's not go there. That's more operational. But one other thing, there's two more things that I definitely want to ask you about. The one is we've dealt with quite a few clients doing what they refer to as cryptocurrency arbitration. So that's basically where you buy Bitcoin, for example, on an American exchange. Then you sell it you sell it on the South African exchange, and there's usually a difference in price, and there's a profit there to be made. And they are circulating the same money over and over again. So they would start off with 100,000 or 1 million or whatever they've got, and then they would do that, bring it back, and now they've made 100,000 Rand profit, for example, for that. So then they take 1.1 million and send it out, or they just keep on sending the 1 million Rand out and keep the profits here. So two questions around that, because one of the practicality or some of the practical challenges that we faced is that every time that million goes, it was a new FIA or a new foreign investment allowance application. So the first million was fine because that went under the travel allowance. But after that, we had to apply every time for that. And every time we had to prove that the client has this money, it's the same source, the same application over and over again until you hit 10 million, and then you couldn't get it anymore. So how does this impact, is these new rules going to make it easier for them? And then secondly, can we also talk about the tax implication of that entire, how will that be taxed, like when you.
So
when
the
you are
tax is
into this
easy.
arbitration.
That is trading, okay? And the gain is fully income taxable. So if you're on 45% tax rate, it's a 45% tax rate because you're trading. If you just bought it and you held it and didn't move it around, then I think you can still go capital gains tax. It's a little bit against what SARS says in their guideline, but their guideline is not law. Okay, so there's no real law. There's just the guideline from SARS. But coming back, I think this 1 million single discretionary allowance, why they want a tax number linked to that, is specifically about the cryptocurrencies. So the other important thing that we now know is going to be in the update that Circular 6 is that you need a tax clearance for the remittance or sending out of South Africa of cash and assets. Cash and assets. The only thing they're going to exempt is the 1 million household allowances when you really physically go through a shipping company. So this is an attempt to stop the flow of Krugerrands, because there's a big flow of Krugerrands out of the country, and then cryptocurrencies. And they're going to monitor that. So the unfortunate thing is when you then bring that money back with the arbitrage onto a South African platform, and that then converted back to South Africa, they do not tick off that you are no longer have that 10 million outside South Africa, because remember now you over the 11 transactions, you now have 12 million rand back in South Africa. And the Reserve Bank does not know that, and SARS does not know that. So it's not reported as money coming back. So that's why they're changing the tax clearance rules to assets, including cash, to catch, because remember, the Reserve Bank does not acknowledge crypto as a currency. For them, it's still an asset. And that's how they're going to monitor it. Is it going to be successful? I don't know. Is there that innovation hub that the Reserve Bank have? I hear from people sitting on that there's more and more reporting from the South African wallet holders or the platforms to the Reserve Bank and to SARS. So that's quite interesting. They are not, it's an additional report they have to do. It's no longer just a CRS and FATCA type report. So they don't share much of that with us, because remember, it's probably most of the authorized dealers, because all of those platforms must have a bank account with an authorized dealer. So there's a lot of processes behind the scenes that will probably be revealed during the tax year. And I think that, so one of the comments that was made by Reserve Bank on Wednesday is that the capital flow control, the new thing replacing exchange control, will be fully implemented only after the medium-term budget. So we're talking about October, November. So there's still a lot of research and processes. So I don't have all the answers, but that's the part I know.
Yeah, and it's interesting, and I think it's important to know, because I think people have these, or call them investors or clients, whoever people are into crypto, think that because it's there and it's on the blockchain and it's, nobody would know about it. It's your little secret, and as long as you have the password, it's only you that knows. But like, things are changing, and the information again is out there. So we need to be careful, and we need to tell clients that they need to disclose that when doing their tax returns as well.
So I just want to quickly, if you allow me, I just see there's a very important question from Russell. Hello, Russell. Thanks for the support. Unfortunately, SARS is not publishing all this on their webpage because they've refreshed their webpage. The Circular 6 is on the Reserve Bank page. So the Reserve Bank has been very forthcoming with their circulars. They are public. So on the Reserve Bank page, restbank.coza, you can go to new publications and you look at the exchange control circulars. There's various circulars, but look at the exchange control. So the Circular 6 is on the Reserve Bank page. SARS will probably do when the tax season is announced. We expect them to announce those things, because they're probably waiting for the Reserve Bank to update the Circular 6 to either replace it or update it. But the request information we get from National Treasury, and it's on the tax committees that I sit when we meet with National Treasury. So that's my source.
Awesome. And then Frederick, hopefully that also answers your question, because he says, can we have something in writing to refer to when we give advice? So yeah, the best is to go directly to the source, which, as you heard, is on the Reserve Bank's website. So you can do that. Then a question again, so let's get back to the retirement funds or RAs and those things. Like, is it possible that when I cash this out, to have that money paid directly to a foreign bank account?
No, that's very, very important. That's one of the biggest practical changes, because in the old days, once you had a blocked account status or foreign capital account, you could request any post-immigration asset to be paid directly to a foreign account. So now what's going to happen is that the process is short at the moment, and that's the IBR test that finishes today and gets implemented tonight, is that you submit the request to have the RA encashed to the fund manager, the retirement fund manager. They then have to collate all the documents, and it's very scary to think they're now going to decide whether you're tax non-resident or not. So I do think in the background, SARS hopefully gave them some guidelines. Then they submit that to SARS for a tax directive, the TD, and SARS will tell them what amount of tax to be deducted. And then the Circular 6 says there's an obligation on them to then later give proof to SARS of the net amount paid to your South African bank account. So now is the question, do I do the TCS or TCR, the application to take my 10 million out? Do I do it on that day? Or do I do that before I start? I would say do it simultaneously. So remember, we've had that process of you can do the PIN and refresh. So you can only at the moment do a TCS for the 1 million rand cash lying in your bank account. You do that. Now, a month later, 6 weeks later, let's hope that's the turnaround time, you now have 4 million net after tax from your retirement annuity. Then you just do a refresh PIN. If SARS has not received all the information from the fund managers, they will probably block it. If they have all the compliance in terms of this new IBR test, then they will just automatically approve it. But short answer, retirement funds, net of tax, gets paid into a normal bank account. There is no more a thing like a blocked account, goes to a South African account, and the South African account then transfers it out in terms of normal rules. Currently, first million without tax clearance, 10 million, normal tax clearance, anything above 10 million, it is first tax clearance and then Reserve Bank verification.
Awesome. Hugo, so when should someone get in touch with you? When, like if we work with a client and we look at this client and say like, Ishna, this needs to go to Hugo, what does that client look like? And then also where can people send them to or refer them, or how can advisors get in touch with you if need be?
Yeah, so my webpage is this tax forum, name of the peers.coza, okay? And then there's the one tax migration that most people know as well, taxmigration.com. But I would say as quick and as soon as possible, because on my diary, I have fees where I help Russell, allow me to use your name. I have a fee to help Russell, or if the client has no one, I have estimated the fee. The fee can change, but there is a full process fee, which appears a little bit expensive. But remember, why I have to include that is if you do not have if the taxpayer does not have a financial broker in South Africa, I now have to go and appoint someone because I am not registered as a financial advisor. So therefore, the important part for the people from your industry is to say, now we have to work together. And they may need to go back. If that's the take home today, is they must go and sit and think, what are they going to charge their clients? Because I'm charging a fee. I would expect you to also charge a fee. And I have no objection if you come to me and say, my part of the fee is this much. So I can foresee that it will be semi-applied on your name, but I will be your advisor in the background. Because when they ask the question about, is the client tax non-resident and what's the tax residency certificate look like from England? You're not going to know, then you'll need me. So we'll have to cooperate on this. So I really look forward to as quick as possible. And on my diary is, for example, a 30-minute call. Start with that. You can upgrade. You don't need to commit for the full amount, because some clients, we need not do anything. Their tax records may be up to date.
Yeah, absolutely. And I think it's quite critical, Hugo, that, initially, I think when people look at those, because they're so used to financial planners doing things for free for them, and then suddenly they go to a professional, and I've referred several people to you, and I always tell them before I refer them, listen, Hugo charges a fee, but it is worth, what you get is worth so much more than what you're paying. And I've never, ever had somebody come back to me and say, listen, no, this is ridiculous. So important to also position that before the time, because people are thinking like, financial planners just help me. They don't charge me in most cases. So important to also position that upfront. And that's awesome. So Hugo, thank you very much. I think it was, again, an amazing discussion. I can go on for another half an hour at the very least. So please enjoy your weekend. Thank you very much for everything that you shared with us and for everything that you do for clients, because, it's so hard to distinguish between what is the right advice and what's not. So you've been doing this since 2000, I think you said, or was it in the 90s that you did your very first one?
It started, but really 2000, big time, yeah.
Yeah. So awesome, and thank you for that, and I hope to chat to you again soon.
Thanks a million, and thank you for the opportunity. You're doing an amazing job. Thanks a million.
Thank you very much, Hugo. Have a good one. We'll chat soon. Alrighty, so with that, it's time to talk a bit of marketing and branding, and we have none other to do that for us this morning than Rizan Oosthuizen from Profile Me.
Good morning, Francois, and good morning to everyone here. An interesting fact to kick off the day or to kick off this segment. From the moment you wake up, your brain is flooded with over 7 million colors to process. Color has been part of playing its part in evolution from just about 700 million years ago. It's been around for a long time. I mean, how's that for a wake-up call? Color is an integrated part in our daily lives and is an important communication tool. Nature uses color to repel predators or to warn off predators, but it also uses color to attract pollinators. And in that same way, you can use color in your branding and in your business to attract the right kind of colors. Well, there's a lot of research on using colors and branding, and there are certain discernible patterns that we can work off. Color psychology isn't black or white. We have something that we could loosely call a color memory. And this color memory causes us to associate a certain color with a smell or a taste or a feeling. How we perceive color is affected by culture and context. People will perceive it differently. Your experience will dictate how you perceive color. And this is the same for your clients as well. So big brands, they spend millions on researching colors and finding the right colors that will allow them to get to force or make their customers do what they want. So let's look at some colors, and I'll give you my top tips on choosing colors. So if you look at this color chart here, in the color spectrum, we've got colors broken up in two parts. You've got your warm colors and you've got your cool colors. Now, warm colors tend to energize and stimulate, while cool colors are more calming and relaxing. Interestingly, blue is by far the most popular choice in Fortune 500 countries. And blue is associated with loyalty, trust, and intelligence. And on the other side of the spectrum there, you've got red. Red is the second most popular choice in Fortune 500, and it's associated with strength and bold moves and stimulation. So on this huge spectrum, it can get a little confusing. So how do you know which side of the spectrum you should go and where you should start? Thanks, Francois. You can pull that one down. And I've got a 3-step process that I would suggest you implement. And these are the basics, and you can build on from there onwards. Step number 1 is research. Research your audience and ask yourself, what is my business about? And who is my audience? Who am I talking to? And remember here, very important is to look at your competition. You can't get away from this. When you're starting off and you're choosing colors, look at what your competition is doing. And this is really where the strategy comes in as well. Are you going to go with a color that's already established and familiar? So it might be received, easier or better. Or are you completely going to break the mold? If you are planning to break the mold, bear in mind you're going to have a strong concept, and you're probably going to need a little bigger budget. Now, step number 2 is establish tone and context. What is it that you want to be known for, and what is it that makes you different? How do you want to make your clients feel about your differentiation in the market? And what do you want people to do when they think of your brand? Are they going to be energized, or are they going to feel secure? So here, establishing tone and context, very important. Are you going sleek and sexy? Are you going innovative and energizing? Are you going soft and nurturing? Or are you going secure and safe? So important things to establish in step number 2. Then in step number 3, and this is the really fun part, is pick 3 colors. And you're going to start off, it's really not that hard. If you look at that color spectrum, and you can research them online as well, there's a lot of them online. Research that, you're going to choose 3 colors. First, you're going to choose your main color. So for instance here, if you're going to go with a blue, make sure that you find a shade of blue or a hue of blue that you identify with most, and that also represents what your brand stands. It needs to align with what your brand stands for and what your business is about. Now, remember, this main color is going to be with you for a very long time. So ensure you pick a color with longevity and strong legs. Then secondly, you're going to pick a complementary color. So if you pick blue, you're probably going to pick a complementary color on the same side of the color wheel. So you might pick a complementary blue to that main blue that you picked, or you're going to pick another cooler color, like for instance, say a gray. And you might actually find yourself using a lighter and a darker shade of that complementary gray, depending on the application that you need to use it for. And the third, pick an accent color. And also, again, this is the fun part of it all. And this is where you bring in tone and context. This is the qualities that make you different. And in general, this color is going to be on the other side of the wheel. So you see blue was on the cool side. You might choose a yellow, which stands for, energy and innovation. And so what's really nice about accent colors is you can, depending on the campaign, swap out your accent color to run with, say, breast cancer, which is pink, and a lot of other colors that is related to the calendar of the year. So in closing, the most important thing to remember is that colors mean different things to different people, and it also means different things in different contexts. So color is not so much a science of black and white. Color is more a science of common sense and context. Picking the right colors appropriate to the purpose of your brand and how you want to make your customer feel. You need to find something that both represents you and also something that your audience can relate with. And that's pretty much all from me. A simple 3-step process. You've got your warm and your cool colors. And I hope you take that with you and you have a colorful day.
Thank you very much, Rizan. I love that bit about a little bit of common sense, because it's not so easy always. So by the way, Rizan is the one that was instrumental in the new look and feel of Propulsion. So we spent lots of time on this, and it was amazing what came out of it. So Rizan, thank you. It was a very insightful session. Really enjoyed it. Have a fantastic weekend. We'll chat soon.
Awesome. Great.
Good, man. Stay safe. Bye-bye. All right, with that, let's quickly do some updates before we head on into the last day of the week. All right, so the first one I want to just make you aware of is the upcoming CPD webinar or online session, live online session next week, Wednesday. We're going to be talking about using video effectively. And this is about so much more than just making videos and posting them online. It is also things that you can use in meetings. It is things that you can use for communicating in different ways. So please join us for that one. If you are a Propulsion Pro member, it is absolutely for free. And I'm delighted to say that we changed the way that you can go and register. So you would follow the same process as everybody else, but you will indicate that you're a Propulsion Pro member, and the price will magically reduce from 350 Rand to absolutely nothing. So you can do that. The place where you can go and register for this is you can just go to the link propulsion.co.za/video. That is propulsion.co.za/video, and it'll take you to the event page. That is all the information that you would need to know, everything about what you can expect and all of that, as well as then a place where you can go and register. And if you're not a Propulsion Pro member, it's going to be 350 Rand. If you are a Profile Me client, it's going to be only 300 Rand. So, Razan is sponsoring a little discount there, and that's amazing. So thanks to her for that. So that is that one that's coming up. The other thing that is important, or that I do just quickly want to maybe talk about, is that on Wednesday this week, we had our very first Q&A session that we had for Propulsion Pro members. It was really amazing, the discussions. It was an hour that absolutely flew by. We had 8 of the members that attended that, really valuable, and really looking forward to the next one. We do that every 3rd Wednesday of the month for members only. So something to definitely consider. There's a lot of value in there, and a lot of learning and connecting and things that happened there. So really excited for the next one. So thanks to those 7 advisors and members that attended that session. I really enjoyed it. Then what else? Then also the tax tool is available. Please go check it out. You can find that at, where is that? Here we go. propulsion.co.za/tax tool. Please go and check it out. It is a valuable tool when doing financial planning. It is not doesn't mean that you need to be a tax practitioner. This is just a lovely tool that will help you identify risks and opportunities for clients just by using their tax assessment, and a whole host of other things that are part of this tool. So there's quite a few of you already using it. Thank you for that, but please go check it out if you haven't yet. Then lastly, I definitely want to say, if you haven't considered Propulsion Pro, please go check it out. There's so much value here. And again, I had meetings last night where this is just going to explode. This is going to grow exponentially in terms of what we are planning to do. And being a part of that for what you pay to be part of it is just going to become so much more of a no-brainer as we move forward. So please consider that. You can go check it out at propulsion.co.za/pro. So the most important thing is the CPD event, using video effectively, that takes place next week, Wednesday, the 28th. And I'm looking forward to seeing you there. So on that note, thank you very much. I hope you have a fantastic weekend, a long weekend. So I'm off. I only start working again on Wednesday. So after this afternoon, I think my last thing finishes at 4. So once that is done, then I'm done as well. So hopefully you are doing the same. Let's recover. Let's just go and enjoy the weekend with family and friends. And I'll see you back next week, same place, same time. Thank you for all your support. I deeply appreciate it. Have a fantastic one. We'll chat soon. Bye-bye.